All right, good afternoon, everybody. Can you confirm that you can hear me? Cool, cool, cool. All right. With the disclosure, I'm an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Current position disclosure. I think it's relatively unchanged from the last time I did a meeting. All right. Where's my light speed? There it is. All right, let's jump in. So strong day from the market today. Really like a day two. So SPY's up 0.8%, Q's up 0.8%, and IWM up 0.75%. So pretty much across the board. Early on in the day, it seemed like off the open, Mag 7 and Q's were really, really leading. And then it kind of flipped a little bit. The Q's started showing some relative weakness here between like 10 and 11 as the IWM then kind of went into just like a very grindy up move. So by the end of the day here, we have all three our major indexes that I like to look at up by about the same amount. So popping over to 5 minute chart, I don't think there's too much to talk about. SPYs are kind of somewhere in the middle. The Qs are most interesting. They ripped higher here. I initially called out a short off of this candle, off the extension when that little doji came in. That failed. We broke right through that high. And then the second kind of RDR doji trade is the one that worked better for the correction down into that equilibrium zone. Then there was a notable lower high here in the Qs that was not confirmed by the SPYs. And again, the IWM went into that upside grind. But this notable lower high in the Qs as that relative strength, relative weakness flip was ongoing. Qs then actually broke lows, which was interesting, just to then kind of grind up into the afternoon as Apple resumed its strength. It seemed like Apple was a little bit of a leader on both sides at certain points throughout the day today. So that's kind of the intraday. Popping over the daily chart, let's see what our update looks like. So my first afternoon meeting in a little bit, but so we broke out on, I think it was Wednesday of last week. We had been looking at on the upside this 574 half for weeks, and Wednesday of last week we finally had a real confirmation breakout. Good looking daily candle, closed at highs, everything that you want to see. Thursday of last week when I was on my flight to Las Vegas, looks like I did not miss much from the S&P as the SPYs gave an inside day. Friday though, inside and up, so it kind of resets the pattern there. So it's like a day one now of continuation after the inside and up. So then today is basically a day two, like Pat was saying. So at the close here, we have about $8 of extension from the ADMA on the daily chart. That ADMA on the daily will catch up a little bit tomorrow. So if I had to guess, would probably be like $5 extended if we were to open up flat tomorrow, which we probably won't. We'll probably either gap up or gap down. So we'll reassess that in the morning. But basically, the market is now trading pretty firmly into what I call the no man's land zone of extension, which is not extended enough to come in on their side and think that you can short, but too extended after two strong days in a row for any new buys. So let's see how we gap tomorrow to see how we should strategize, obviously. So we always want to assess that in the morning. But it was a pretty strong day. So pretty strong day two for the market. If we could get a big gap up tomorrow that gets us closer to extreme extension, maybe we could look for like an RDR setup or look to come in and short a little bit just off the extension. But too early to call until we actually see what a potential gap looks like for tomorrow. So the SPYs looking fantastic, looking super bullish still technically. Qs also broke out from resistance. We're really strong off the open, probably just some momentum players coming in off the breakout above this like 495.50 to 495 area, 494.50 to 495 area for the Qs. It's also an inside and up for the Qs. So another really strong day. These are trading at $6 plus of extension. It's also kind of in that no man's land to do anything new for tomorrow if we were to have a flat open, but we'll also reassess that again tomorrow. And finally, the IWM. The Russell was the least extended coming into today. Not that any of the indices were overly extended, but the Russell was the least so. Beautiful day on Friday when I wasn't really in the office. I did trade a bit on Friday, but beautiful day for the Russell on Friday. That's exactly what the IWM needed, was a solid Maribozu candle to get it out of all this wish-wash price action around 218. So small caps, mid caps had a pretty big day on Friday. Pretty good continuation today for also a day 2. And, a little bit of extension, but it's not really too bad in the IWM because it had been weak coming into it. So we'll see if the market just continues this technical grind as we don't have too much going on from the economic news perspective until we have retail sales on Thursday. And we don't have any of our Mag 7 stocks coming out right away either from an earnings report perspective. So still going to be some time there. For myself, for my own trading, I did finish negative today, but it was really primarily just because of some of my swing positions. My day trading was up a bit. Overall, it was pretty good. We had a great call for some of the crypto names out there this morning, starting in the morning meeting. Some Mara, I think we were looking at this 1650 area in Mara to go long versus. So gapped up this morning, had a quick pullback, but gave that doji candle as the ADMA was catching up. So I think I bought 1642 or something like that. At one point, I had put a buy stop at 1651 because that was the daily level. I didn't buy it up until that point. I didn't buy it on the way down. But when it broke through 1650, which is the daily level on the downside, I then put a buy stop to enter at 1651. It continued to trade lower, and then I was just kind of watching how it was trading. I watched this downside tail come in, and then instead of waiting for the buy stop to trigger at 1651, I actually canceled that and bought that same stock at 1642 or so, and then caught that entire up move. I wasn't super greedy with my game plan on Mara. Planned on it being a day trade no matter what, so I kind of just ran out of stock and hit a target around 1750. So made $1 on it. It was a pretty good trade, and then I more or less avoided it the rest of the day. The other one that I traded was the CLSK. Unlike Mara, where I waited until I got a signal on the intraday to buy, CLSK I kind of just bought some right away as it was trading above the $10 level. We mentioned in the meeting that the proper spot to probably use was more like 970-ish based on the daily chart. 970-ish, but 10, or actually just below 10, was holding pre-market. So I said if you're more of a momentum trader, you could try versus that $10, but I really think the right spot's more like 970. So I bought some initially, pretty much right at the open, not at a great price. I think I got $10.02, but I was planning on trading it really more versus that 970. So I was able to add down a little bit on the way down, build into a bit of a position similar to Mara. This gave a little bit of a downside tail off the 935 candle. Eventually the ADMA caught up, and it was able to break out through some of this congestion and get above 10 and give a decent move. So this was another one. Actually had a little bit more. I executed Mara better, but had a little bit more of a greedy game plan for CLSK. It was near my target. I was really just looking for a move to the 1090s, and then I decided to. I didn't love the price action right here with this little tail to new highs that immediately pulled right back down. So I just think I trailed, if I remember correctly. I think I just trailed it really tight at that point and stopped myself out on the way down. Really, just when this doji broke at 1120, which is a super tight trail. I pretty rarely trail that tight, but I just wanted this to be a day trade from the get-go. So those worked out pretty well. Nvidia I tried a bunch of times today. I shorted it here off the extension, caught a quick pullback, stopped myself out, so it was like a break-even trade. Then I re-shorted versus the 139.5, similar trade just off the 5-minute extension, and NVIDIA, I've noticed recently, has been doing a really good job respecting its like whole numbers and halves. Really more of the whole numbers. And there's been a lot of liquidity in a lot of them. So a trade that I've actually done at some points last week was when these things are getting up to those whole numbers. Excuse me. Getting up to getting up to those whole numbers for the first time. And I haven't traded like this in years, but recently over the course of the month of October, I've been trading a little bit differently and doing a lot more day trading in singles and doubles, like I was talking about with Greta in the podcasting today, than I normally do, or I'm usually a little bit bigger picture. So a couple points over the course of the last couple of weeks, when NVIDIA first gets to that whole number for the first time on the day, and there's a boatload of liquidity there, I've actually had some decent success shorting like 95 to 98 cents. I might short like 5,000 shares at 98 cents and then put a buy stop at 01. And then I'm like covering like 1,000 shares at, but if I shorted 5,000 shares at 98, I've been covering like 1,000 shares 93, 1,000 shares 88, 1,000 shares 83, 1,000 shares 78, and then letting the other 1,000 shares run a little bit more. Excuse me. I have like a little bit of a cold or something. And actually having like really good success with that. Specifically doing it like the first time it gets up there with a decent amount of size, but only like 3 cents risk plus slippage, because the buy stop at 01 you're going to get slippage, and it's been working pretty well. So I actually tried that again today off that 139.50, where I had a break even trade already off of this pullback right here, and then I reshorted. I think I spread. I didn't do it all at 48 cents. I think it spread it out a little bit. I did like 45, 46, and 48, but still had like that same 5,000 shares. The mistake was it worked once without me. You almost can't even see it. It happened all within the same candle, but it actually got up and ticked 139.50 even, and I wasn't paying attention. I was looking at something else, whatever, and then it had a quick drop down all within that same candle for like 25 cents or so. Or if I actually did it correctly and did it the first time it got up there, I would have been able to cover 4 out of the 5,000 shares. And then I probably would not have reshorted it, or at least reshorted it less. But I didn't capture it that first time. Maybe that was my mistake. So I ended up shorting like that, saying 5,000 shares, average price probably, 139.47 or something like that. Buy stop at 51. And then it pushed me out. It triggered through the 139.50, cleared the liquidity there, triggered my buy stop. I got stopped out with 1 penny of slippage, so 139.52 on like 5,000 shares. And then unfortunately, it dropped like a rock after that for the amount of size that I had for almost $1 pullback. So it didn't work for me there, but kind of an old school trade. That's how I used to trade a lot that way 10 plus years ago. That I've noticed has actually been kind of working in NVIDIA recently at certain spots. So, working until it doesn't. But did not work for me there, but that was partially because I missed it the first time. So then I was down a bit of like a little bit of money in NVIDIA, not too much, because you lose 4 cents on a lot of stock or whatever. It's not that bad. But then I ended up re-shorting it in front of 11 o'clock here on the way down after it did this little double toppy thing and was pulling back down. So a little bit of a different trade than I was shorting extension on the way up, kind of shorting on the way down. And that actually worked pretty well for me, to the point where I made all my negative P&L back plus a lot more, and it turned into a pretty positive name. So at the same time, though, as from a day trading perspective, I did well with some of those crypto names and ended up doing pretty well with NVIDIA by the end of the day. I got pushed around a little bit by this Apple, and it ended up nicely down in Apple, and just from all day trading. I tried to buy this breakout here, like this little intraday break. So it was already, for context, right? It was already trading above the 229.50 level that we discussed in the morning meeting, and I missed that trade off the open. You could have bought 229.50 off the open versus lows. It would have been 90 cents worth of risk. Not terrible for an Apple breakout when the daily chart looks as good as it does. Still a bit, though. So missed that trade. Worked really well, and that low of the day held all day. Good healthy pullback into the equilibrium zone. Nice pivot here. This would have been a great spot to go long also, by the way, off this pivot low for technical continuation of the trend. I missed that also. But then I saw this kind of breakout through the intraday resistance that it established at about 230.75. So I tried to buy that. I even sold a very small amount at pretty much the high of this tail. And then that trade just totally failed for me. I gave probably a little bit too much space, and I got stopped out. And now this thing looked like it was failing off that breakout. So now I thought I was looking at a false breakout. It's back below 230. Next thing you know, it's back below 229, but it's extended. And then I kind of shorted into this retest here. Worked okay for a minute, and then that one failed on me also, and I overstayed my welcome a little bit in the trade. So Apple got me both ways, and finished down in the name, day trading it. But everything else worked out pretty well, so my day trading ended up positive on the day, but the Apple one, the negative P&L on it's probably a little bit bigger than it should have been. So that pretty much, kind of describes my day today. Just getting back into the swing of things, and I'm in a new location, and I'm on my travel setup, so trying to take it a little bit easy. But yeah, overall, just a really strong market. Good continuation today from Apple, which I still have up here. That broke out through its level. We'll see if that looks like it could easily give another day. And SPY's market's looking pretty good as well. So that is all that I've got. I am happy to answer any questions anybody has. Okay. First and only thing I'm seeing in the VTF right now is from Christopher, who has a two-part question for me. Do you have a good way to define your entry on an RDR setup like today in Tesla, as it's reclaiming the previous day's lows? I'm not totally sure when to enter. Do you wait for a 5-minute candle to close after it's reclaimed, or do you just watch how a shorter time frame looks? Sure. So I didn't take that trade. I know some of the people on the team did. So maybe if anyone here is on the team and still tuned in for our afternoon meeting and took that Tesla RDR, maybe if you want to give some feedback on specifically how you executed it for Christopher, that'd be great. I did not take that trade as I'm still short, but all the same, I'm happy to take a stab at how I probably would have taken it if I was involved. So, the thing with the RDR trade, which technically, by the way, this is not an RDR, or maybe it is. I guess, I don't know. It depends on if you want to argue if like 10-10 counts as a day down or not. You could argue that October 9th was a down day, October 10th was a down day, but it's got that big tail. And then that Friday was clearly and obviously a down day. So you could make that argument. Or you could argue that this was all part of a consolidation and really this was a day one on Friday. So technically an RDR is supposed to be like at least a day two. But one thing that it does have similar, at a minimum similar to how that RDR setup looks like, is enough extension. Got smoked on news on Friday, so there's a lot of extension here. The ADMA is trading all the way up at 234. The stock is at 215 at lows. Yesterday's low, which is what's important for that trade, is 214.38. So at that low, you got $9 of extension from the ADMA. So that's enough to look for a type of trade that is, I don't want to say reversal, even though RDR stands for Red Dog Reversal. I've always felt that that's a misnomer. Really what you're looking for is not a reversal. You're looking for a retracement. So that's definitely enough. That's definitely enough extension to look for the retracement trade to come in. That's for sure. There's room for this thing to bounce back and still be bearish, but bounce back to easily, 228 to 232. That area could be an upside target for that RDR trade. Now, technically, the way that you're supposed to trade it, if you're going to do it the way like Scott Ruther teaches it, is to just buy back through the previous day's low with today's low as a stop. Now, what you're asking me is what I understand is sometimes it's a little bit trickier than just quite simply buying back through yesterday's low, because sometimes you'll see, even on a small time frame, I don't know if it did that today or not, sometimes it can be a little shaky there, right? Like, what about on this, did this 10-10 candle break the low? 34, and this one is, yeah, here's a perfect example of how it can sometimes be a little bit tricky. Is technically on the 10:10 a.m. candle, it broke the previous day's low. The previous day's low is 38 cents. It broke it, it went to 34 cents, then it went back up through it. So technically you would be buying, 38, 39 cents on the way up with a stop loss of 33 cents. It's very, 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 very tight for a Tesla, by the way. And then you would have gotten stopped out on that. And then the second time when it got back up through it, if you tried it again, is now on the 10:20 candle. You buy it back through that 38 cents again. This time the low is 80 cents. So you're risking more like 50, 60 cents on that trade. And that's the one that actually works. The problem I find sometimes is what this candle did on the 10:10 a.m. candle, where it broke the low, went back up, and then failed. Sometimes that could happen like 6 different times. So you just, keep buying it back through the previous day's low at the stop of today's low over and over and over and over again until it works or never goes back through it. And then you're kind of churning yourself there a little bit. So that's something that I've always found a little bit tricky just with the execution of the trade. So all the same, I do sometimes do it that way, like the right way that it's supposed to be done per the daily chart, per, the RDR rules. I tend to more look for something on the small time frame as a trade that sets me up for the big time frame RDR, even if it means I'm buying at some point below yesterday's low. Like if this thing just continued to work its way down to 212 and then gave me like a nice hammer capitulation setup down there or something like that, I would buy that hammer capitulation setup on the 5-minute, understanding that if it can get back above yesterday's low, then I'm also getting like the daily chart RDR. That's a lot of what I like to look for. In this one, I don't see that in any real way outside of the traditional way it's supposed to be done. So you could have tried it one time on the 10:10 candle and then tried and gotten stopped out. It was very, very small risk, especially for Tesla. Incredibly small risk. It's very hard to find a Tesla trade where you have like 10 cents risk on a $200 stock, but you did here. And then it goes a second time, and it's more, like I said, like 60 cents risk, which sounds like it's a lot, but it's not for Tesla. 60 cents risk is not a lot for Tesla, especially when the daily chart reward profile is a move up to 230. So you're potentially looking at, 60 cents risk to be able to get $15 worth of upside. It's pretty good. So, about to sneeze. Excuse me. So, hope that helps with the first part of your question. See, you have a little bit of a follow-up. I thought Tesla was a questionable setup for the RDR. Yeah, kind of the daily it is a little bit, but it certainly has the extension. I think I just went for it for the extension. Yep, for sure. Second part of your question, I took a short in CrowdStrike for another RDR. Let's take a look at CrowdStrike. Haven't looked at that daily in a few days. Oh, okay, for an RDR on the upside. Got you. For a pullback. Stock's been very strong. Say it would be a day 3. Technically extended the upside. This is more of the setup that you're looking for. Day 3 plus, extension to the upside, shorting it back through yesterday's high. But let me read the rest of your question. I kept on a quarter of my shares by the end of the day, but trailing something like this out, do you use a 15-minute or do you wait to see where the price action corrects to? I'd like to see it back to its 9 EMA, but might be a bit ambitious. On the daily chart, I assume you mean. So I don't have a 9. I have an 8, which is down at 302.60. That's what my target would be also. Not on 100% of my position, not even on 50% of my position. But 10 to 25% of my position. You're saying you got 25% there at the end of the day. So I think that's a healthy amount. Maybe a little bit greedy, but I think it's a healthy amount. It's a really good trade. Really good trade there on the day 3. Triggered early on in the day. You probably had something like over like $1.40 of risk, $1.40 of risk, something like that. But the reward profile on that is down to like, almost $20 a reward, maybe a little less, $18 worth of reward. Keep in mind that ADMA is going to catch up a little bit more tomorrow. So yeah, I mean that's a really good trade. So that as far as trailing goes, trailing Trailing counter trend trades is difficult because for me, inherently, my trailing rules require pivots that are part of a trend. So if it's counter trend, you technically can't trail it because it's just a retracement trade. But that's a counter trend trade on the daily. In fact, your 5 minute chart, you end up actually being with the trend. So if you wanted to, you could be trailing on a 5 or on a 15-minute chart. What time frame do I trail on in this sort of circumstance? It depends on how greedy I want to be honest. Depends on how much I like to trade big picture, um, how much I like the reward profile, what I think about the market itself. Sometimes the market will make me want to be a little bit greedier on having an extra short or having an extra long or what have you. So I think that that's kind of personal preference based on the other layers of probability that you might be looking at that are going to be influencing how that trade works out. But yeah, it's a really good job. Yeah, yeah. 25% I think is a lot just because of how big of a move you got. You got a $10 plus down move when the remainder of your reward is like, I think like $7, but every day that goes by it's going to be less than that. So maybe this ADMA is at, I don't know, 304 tomorrow, and now you're potentially going to be giving it back $12 to make six more. And I don't necessarily have a problem with that, to be honest. I do that sometimes. But I would want to make sure it's a small percentage. Maybe somewhere between 10 and 25%, because I sometimes like, and it depends on what you're thinking, but I sometimes like to hold a very small piece, like less than 10% or 10%, to see if the retracement down becomes a reversal. Because right now, all you're looking for is a retracement, and that's all you can count on is a retracement to the equilibrium zone. Sometimes, even though it's much lower probability, it makes it worth it from a risk reward perspective to hold a percentage of that position just in case a retracement actually becomes a reversal. So it's also something to keep in mind. Thanks for the questions, Christopher. Great job today. Appreciate you asking them. Popping over to the YouTube channel where I'm seeing some questions. Wait, I missed one from Tate. SoFi. Is $20 an unreasonable price target for a swing? I've been in it actively for over a year. I don't think so. My target has only been $12. It's been that for a very long time that I've been involved in this. Years now, actually. I remember back here in July 2023, I went to 1170. I almost fully liquidated the position. Almost, but didn't quite. So my target, as I've been trading this throughout this entire like multi-year base now, has just been $12. 10 is very hard. Even when, and this is a weekly chart, even when it gets above that 10, sometimes it'll stay up there for a few days, but it's never been able to hold above. 10's a really big level. That could be a good target for people also. And I did take a bunch off into this up move today. 10 has been a really difficult spot just because this was a SPAC. So, SPACs, $10, it's a special place. So I've been looking for 12. Do I think that 20 is unreasonable? No, I like being greedy when things break out of massive bases. And I know that my buddy Stefan loves the fundamentals. And when he likes the fundamentals and the technicals confirm it, sometimes you can get a lot of bang for your buck. For me, for the moment, I'm going to stick with my game plan, which has been looking for a move to 12, and then I'll reassess things if I find myself out of the position. So I appreciate that, Tate. From Rich, while you encountered difficulties day trading Apple, how did your maker versus taker executions mitigate the overall risk? So yeah, I pretty much exclusively provided liquidity in Apple, except for maybe my first entry. My first entry might have been, I'm just hitting the bid here and taking the offer just to make sure I have some stock and then I'm in the position. I definitely was able to save myself a good bit of money by how I traded it, though, by not paying the spread and by receiving the rebates on all the stock that I traded in Apple. I traded a lot of volume in Apple. I traded a little bit more NVIDIA today than I did Apple. they're both a pretty similar number though. So yeah, good execution always helps. Good execution, good execution is a really important skill to build, even for someone who's a swing trader or whatever your strategy is, because having good execution can oftentimes mean the difference between a trade being a break-even trade or a straight loser on a trade that fails. That's where it's even most important. Or, in my circumstance with Apple today, I had some pretty good execution, even though my ideas didn't work out, and that probably made the loss a little bit lower than it would have been otherwise. Thanks for the question, Rich. Popping over to the YouTube from Music Vixie Bull. Can you talk about SoFi? I'm already long, but they can go much higher due to consolidating for the past 2 years if this move has legs. Yep, so I still have the SoFi chart up. We were just talking about it. Tate likes to 20. I've just been looking for 12, but like I just said, definitely think that if it can really hold above 10, it's got to get above and hold above 10, and now it's, it closed at $10, but it's extended it to 10. So I don't think this is a bad spot to book some profit to look for a rebuy on a pullback. No, I wouldn't get out of everything, but just maybe make a little cash flow for yourself. But there's also great volume in this thing today. So I don't think that this thing is done. But like I said, it was a SPAC, so a lot of resistance there at that $10 zone. But you've got a big, big base for a couple years. If it can get above and hold above 10 for more than just a few days, which it has failed to do on these other 3 occasions that it tried to get above it, then I think it could have some real legs behind it. So I do like the idea. From Kevin G. What are your thoughts on stocks that break down due to Department of Justice news like SMCI? Let's take a look at SMCI. That was back here, right, on the 26th. The level of FOMO since the 3730 is real. FOMO to be long. Okay. We've already hit 50 and holding nicely and missed my opportunity. I don't fully agree with you. I mean, I guess the FOMO for you is real on that, but so first of all, if you're asking me on what are my thoughts on something like the Department of Justice coming in with, news that negatively impacts the stock, I think you have to take that on a case-by-case basis on what that news looks like specifically. For, certain things, it might not be as bad as others. I don't specifically remember what the news was with SMCI, but I thought it was like something that was somehow accounting related, but I'm not 100% sure. That always extra scares me, if that's correct. I don't want to be involved in something that's being investigated by the Department of Justice or the FBI or whatever because of improper accounting-related disclosures or things like that. That's very, very dangerous to be long that stock. And also, it's about the technicals. So as far as I'm concerned, the technicals look like garbage in this thing. And I think that if you bought it, fine. If you want to take like a cute little long somewhere around $38 just for some extension, I don't even like that. I was going to say, fine, if you took a cute little long just to take advantage of some extension in a weak stock, fine. But I take that statement back. This was not enough extension. This was one down day. This wasn't like a day 3, day 4, day 5 down where it's massively, massively extended and then you're, coming in for like the RDR trade that we were just talking about. That's not what this is at all. This had one bad down day on Department of Justice related information to accounting. I'm out. I don't want that trade. And honestly, the technicals continued to look like crap all the way through October 7th. And I think that there was different news that was positive that came out on the 7th. So maybe you could have gotten involved off of that positive news on the 7th when it was like breaking above this bearish consolidation high at 44.30. You're still not long 37.30. You're long 44.30, I think, best case scenario. And even that, I don't know how much you would really like that trade because you're still in front of the highs of the negative Maribozu from when the news actually came out. So I think that this thing only began to prove itself a little bit better when it started to get above like 47, and guess what? 47 is where it's trading now. So I don't think that you should have any FOMO on not being long a stock who's had bad technicals combined with bad news. It's dangerous to be long a stock that's got bad accounting related news. It's potentially very dangerous. So don't sweat it. Don't sweat it at all. It looks a little bit better if it continues to hold above 47. This is a good pivot low 2 days ago with a low of 44.40 that you can keep an eye on. So you can try to trade versus those levels. But do you really want to be long a stock that could have new news related to accounting scandals for like a bigger picture swing trade? I don't know. I don't think so. So appreciate the question, Kevin. Thoughts on the VIX and the SPY? Yes, so SPY we mentioned. I think tomorrow's a day 3 potentially, so we'll see what that extension looks like. VIXI has been overall very strong. The VIX has been very strong, but finally did give some weakness today. I almost felt like today was the first day that the VIX traded the way that it's supposed to trade, where the market really broke up and the VIX traded down with it. Otherwise, every single trading session I've been scratching my head about how we've been having a VIX at $21 with the market at all-time highs with no volatility. Which, again, I sort of understand why. It's because of hedges in front of the election. But, yeah, today was the first day I really thought that the VIX traded correctly. Yeah, IWM, I don't think that the IWM was weaker today. It was up as much as the SPYs and the Qs were. But it was weaker than it was on Friday. Friday was a great day for that thing. Thanks for the question, Cyril. Back over to the VTF from David. Excuse me. I'm catching a cold. Funny, I thought I was getting over potentially getting a cold, and now I feel like I'm catching a cold. Whatever. I had to toughen up. From David, I know you hate crypto. Hey, I was long Mara and CLSK today. You know, you got to put your biases aside. Money is money. So price action's price action. I just don't believe in it is the problem. So I'll never be trying to put on massive risk for massive moves, but I'll trade the price action. Those names traded great today. Anyway, would you have traded the long setup in coin today? Okay, I didn't look at coin this morning. I remember we looked at Mara, CLSK. We looked at MSTR, which I thought was too extended. I probably should have looked at coin also, but I did not look at it. Coin had a day 1 on Friday, but it did not look so extended that you couldn't buy it for some degree of continuation today. You probably needed to give it down to pretty much the low, like 178-ish. So it looks like it actually held perfectly, which makes sense because CLSK and Mara held perfectly also. So you're looking for a gap fill down to 176, but it pivoted from that previous day high around 178. I got distracted by another trade, but I wanted to try 180 long, but the risk was too much if the right stop was the opening low. All right, let's take a look at the 5-minute. So the first thing I would say is that not all gaps need to be filled. And that when you have a gap up and then the stock or market will be strong, usually you still have to satisfy the upside extension that comes from the gap before you get the up move. Whether that means it gaps up really big and then goes sideways, or sometimes it gaps up really big and gives some momentum and then corrects through time or price and then continues. Or sometimes it just goes sideways off the open, the ADMA catches up, or sometimes in the case of all these crypto names today, they pull back towards equilibrium, but don't fully fill the gap, pivot, and go. So for me, the chart here is very similar to what CLSK and Mara looked like. I wasn't looking for the full gap fill. I was looking for more the daily-like level, meaning like yesterday's high, which in coin is 178, but really kind of combining that with what the 5-minute looks like when the ADMA catches up to lows. So, this held perfect down there. A little bit of a pivot. ADMA is catching up to that low. It holds 178. I like that for a long setup there a lot. Buying through 180. Not sure where you would have executed that, but you would have had to give that down to lows. So lows actually held by 3 cents on this candle. Um, I don't know what the importance is of 180 on why you're using that number specifically. So I kind of prefer what I was talking about. This is an expensive name though, so it can move a couple dollars very easily. I mean, it moved up $18 today or whatever. Uh, so I don't think buying 180 versus that low is too bad, but I get it. If you don't really believe in it, do you want to risk $1.70 in the name? It's tough. So, I don't overly see the importance of 180 would be the first thing I would say. I probably would be more trading it just on the technicals of the 5 minute combined with the daily. There's a good chance you would have to pay up a decent amount to get some stock in this thing versus the low. But, it's a $180 stock. It's a crypto name. It could move. I probably would just say, and maybe you have a bias towards Coinbase for one reason or another, but I probably would just say that if you focused on Mara and CLSK from a risk perspective, they would have been easier to trade than Coin or MSTR. So yeah, appreciate the question. From Jim, any takeaways from Traders for a Cause worth sharing? Great question. Yeah, so it was a really good event. There were a bunch of really good speakers. This guy Lance Brightstein, very very impressive. Even though he's like semi-retired, he made as like a day swing trade in a few things that he traded. He made 8 figures um, off the August 5th low that day. Very impressive. Uh, he's been in the prop space for probably as long as I have, but kind of decided to retire to pursue philanthropic. I can't speak to pursue charities, um, and his own charity and stuff that he's building out. But then occasionally will start trading again. Uh, so probably worth following him on Twitter if you're a Twitter user. I'm not really a Twitter user, but super super nice guy, and I did a panel with him on Sunday. Um, but the ones that I got the most out of was there were these 2 doctors who are like performance coaches, who their performance coaches initially really for athletes. The one guy that spoke, I took some notes somewhere. I'm trying to pull them up. Now I can't find those notes at all. Hold on, I definitely took some notes on. This is the only one that I took notes on because I found it fascinating. But where are my notes? Give me a second. I want to find them, and I was even thinking about going over those notes with you guys. Just give me a quick second. Yeah, here it is. There was 2 doctors. The one that I found to be the more impressive one, and it's the only name I wrote down. His name was Dr. Tom Crawford, and he spent a lot of time working with like professional athletes and Olympic athletes to help us win some gold medals, but also does performance coaching for traders in the same way that he does for athletes. And I thought he was the most interesting one. And I just kind of wrote down some notes on a few things that he said that I thought was interesting and corresponded to things that I've seen over the course of my trading career and working with traders. One thing that he said repeatedly when it comes to sports or trading is that it's okay to be disappointed, but not to get discouraged. That disappointment is a natural part of the competitiveness that I think drives a lot of us to success in this business or in athletics. So it's going to be okay to be disappointed in your performance on a given day, to think that you didn't trade well, but that the word discouragement has like a different meaning behind it. And it was just the way that he said it resonated with me because I remembered back on the physical trading floor, you could see sometimes in the way that a trader behaved, like his mannerisms, when he probably wasn't going to be in the business for too much longer because of discouragement. You'd see a trader who was defeated the second that he walked in the door before he even pressed the button that day. So, it's really important, and I've talked about this from a trading psychology perspective in the past. It's really, really important to treat every day like a new day. You want to learn from your lessons from the previous day. If you made mistakes in the previous day, you really want to do journaling and things to reinforce that you're not going to repeat those mistakes the next day. But if you had bad P&L or whatever the previous day, you can't come in the next day and have the mindset of making things back or whatever. You have to break it. People, human beings form habits, right? And you want to have habits that, and this is me talking now just off of the comment that this doctor made. You want to develop healthy habits that contribute to success. And it's funny because he actually, and I have notes on him also talking about habits, but this is me talking now, not him. You want to build healthy habits that lead to success. The problem is when you trade poorly, it can be very easy then for unhealthy habits to kind of build in, unhealthy trading related habits or whatever else. So I think it's really important when you have a bad day, when you have disappointment, when you didn't trade right, whatever it is, that that next trading day you come in. It's that mantra that I repeat all the time to you guys whenever I find myself trading poorly, which is all I need to do today to make money is to do the right things consistently over time. Right? Like I know whenever I trade poorly, that next day I repeat that mantra in my brain over and over and over again. And I do that for a reason because I know how easy it is, because this has happened to me, where when you trade poorly on day one, it leads to you trading poorly on day two. And then instead of fixing it by day two, next thing you know, you have a whole week of bad trading that all started with that day one before you hopefully build your way out of that funk and break your way out of that funk. So that's been my personal method of whenever I find that I really traded poorly and I'm mad at myself or I'm disappointed or whatever, to then make sure the next day I do the right things. So I don't want to say you forget about the previous day. You don't forget about it. You need to draw lessons from it. But you also got to make sure that the next day you're coming in to do the right things so that you're building those healthy habits and not, having that bad day lead to doing all the wrong things and having unhealthy habits. So that was one. Discouragement is more like an emotional phenomenon that is a problem that leads to more like defeatist behavior. So that was my first note that I wrote from when he spoke. The second note I wrote was, to be an excellent trader requires a very strong commitment to excellence. One of the ways that this doctor spoke that really resonated with me, coming more from my professional kickboxing background actually than my professional trading background, though I felt it with my trading also, was the way that he said, and I think that this was probably lost in most people in the audience, was the way that he would use the term professional athlete. And I struggle to put words behind this. It's just something that I saw more when I fought. There's something that really separates the professional athlete from the amateur athlete. Most of the time when I was fighting, whether I was an amateur or when I was a professional at the various points of my career, I would be on, what's called a fight card. So, there might be 10 to 25 fights all in the one night. And amateur fights are just 3 2-minute rounds. So they're quick. So they get them, they get them in and out real quick. It's just 6 minutes of fighting, which, if you've never fought before, if you've never sparred, trust me, 3 2-minute rounds, if you've never actually done that before, will be the most exhausting thing you've ever done in your entire life. But there's something different, and I struggle to put words behind it, but when this doctor spoke, I felt that he knew exactly what I know, which is there's something different in just how a professional approaches things and behaves throughout the process of a competition, where they are professionals, and the wrong way to define a term is by using that term, right? So obviously I'm not doing a good job here, but there's something different in which in the way that a professional approaches things, and that's what comes to mind when I read my second note here, which is, to be an excellent trader requires a very strong commitment to excellence. You're going in and performing your profession at the highest level. You know that this is what you do. I wrote down build your craft and never be satisfied. I wrote down persistence and perseverance. Those are like keys to being successful in this business. You have to be persistent. You have to keep coming back no matter what happened that previous day. And you have to persevere. That kind of circles back a little bit to disappointment versus discouragement, right? It's okay to be disappointed, but you have to persevere. Otherwise, you're going to be discouraged. Then my next note here, and this circles back to habits, actually, because he started speaking about habits, is that you have to have this commitment to excellence. The way that you do that is build excellent habits. Elite athletes build habits of excellence, and they find them fun. They enjoy doing that. They enjoy having those habits of excellence. So, that's sleeping right. It's eating right. It's, and I do think that trading is a performance-based activity in the same way that athletics is. You're not going to become a professional athlete by sleeping 3 hours a night. Well, guess what? I'm hurting a little bit today because I was in Las Vegas, and Saturday night I slept 2.5 hours. And even though last night I caught up a little bit on my sleep, I could tell throughout the day today that my brain was just not firing at 100%. So first of all, that's something to note. Whenever you're feeling a little bit off, you should note that and potentially take a little bit of a step back on your trading. But also try not to let that happen, or, it's life. Life is about balance. I think that is a true statement. You shouldn't be so focused on having these perfect, excellent habits that you don't enjoy life. Alcohol is bad for you. That's a very objective statement, and more science is showing that any degree of alcohol is bad for you. I know that, but I still like to go out sometimes and have a beer or two and be social and whatever, be on vacation or be at my concert or whatever it is that I'm doing. So obviously there has to be a balance there, but broadly, if you want to be the best that you can be at trading or sports or whatever, then you need to be having these habits of excellence. That's what you need to build for yourself. And then the final note that I have, the final thing, was that he told a really interesting story about Roger Federer. That Roger Federer, he won 80% of his matches. And is he retired? I'm not 100% sure. I don't follow tennis in the same way I used to. So Roger Federer won 80% of his matches, but he only won 54% of his points that he played. 52%. 52, I think he said 54. That's incredible, right? That's incredible. What does it mean? It means that, he really made sure that those points that were important, he won, right? And I think that there's some similarities there with trading also. Recognizing your A+ setups when things really come on the line that you have to be able to perform. Recognizing that, this day got spoken about so much over the course of the conference. Recognizing this August 5th trading session for what it was. I remember that morning in that morning meeting, I was like, I always try not to say directly buy or sell. That's not really my role here. My role is to guide more than it is to say buy or sell. But there are exceptions. And that August 5th day, I remember being one of those morning meetings where it's like, we have to buy. We have to buy. Now, whether we're buying off that opening low or whether we're buying off that first pivot low that comes in, I'm not 100% sure, but we have to buy, potentially both. I think that's what it means to be like Roger Federer, who wins 80% of his matches on 52% of his points, is that you recognize when it's important. You recognize when it's game time. So those were the things that I took away most from it. For me at this point in my career, I'm not going to take as much from somebody who's talking about technical analysis, things like that necessarily, though sometimes I find things pretty interesting just to, learn and hear different perspectives on how people approach trading in markets. But for me, listening to a talk between two doctors where one of them is one of the world's top performance athletes for athletes, and they also now engage in this business for athletes and traders. I thought that talk was particularly interesting, and again, it was the only one that I took notes on. So appreciate the question. It's a really good one. Mike Reed saying, to follow up on my comment on learning about your mistakes, I heard a great quote from Tom Dante. Every corpse on Mount Everest was once a motivated person. He used that quote in the context of learning from your mistakes, because just being persistent isn't always enough. Yeah, for sure. All right, cool. I'm looking to wrap things up. Is there anything else on the YouTube that I missed? Kevin G in the YouTube is saying that Lance's Twitter is the one Lance B, at the one Lance B. What are your thoughts on Vegas as a city? I hate Las Vegas. I want to go visit, as I'm considering moving to the West Coast for work reasons. But I also think it would be a great place to connect with traders. Las Vegas is a really good time, in my opinion, for like a day or two. Once you're there for more than 2 days, I mean, it's just, in my opinion, it's like too much. It's in some ways, New York City is hectic and too much, but I don't know. New York City's got neighborhoods and culture and things like that. Las Vegas is just like endless slot machines, and people that depress me by sitting at those slot machines and chain smoking in front of them. Can be a really good time for a couple of days. Go out to shows, go out to clubs, go out to events, things like that. But after that, I got to get out. 1 or 2 Vegas trips for a couple of days a year at most, and preferably because it's a conference or something like that. And I thought it was a great conference. So next year when they do it in Vegas, if anybody wants to go, you should go, and the money all goes to a pretty good cause. Thanks, Robert. Yeah, I love talking about the trading psychology aspect of things. I would say it's on you guys a little bit, though, to put the questions out there that get us talking about it. So I agree with you. We should talk about trading psychology more often, but that means I need people to ask more trading psychology questions more often. All right, folks, I'm going to wrap it up there. Have a great night. I will see you all tomorrow.